Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City on this, the 14th day of April 2020. I do like to remind you I'm the author of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks, and you can sign up for that letter by going to miningstocks.com. I'd also like to encourage you or invite you to follow me on Twitter. Jay Taylor Media, Jay Taylor Media is my Twitter handle. Also like to remind you of Chen Lin's letter, What is Chen Buying, What is Chen Selling? And you can sign up for Chen's letter by going to chenpicks.com. And Michael Oliver, who will be with me in just a second or two, it's olivermsa.com to follow Michael Oliver and to sign up for his excellent service. I do want to thank all of you for listening to this show, making it one of the more attractive, one of the more listened to shows, I should say, on the Voice America Business Channel. I think it's one of the more attractive ones, but obviously a lot of other people do too because we have a lot of listeners. So thank you for listening every week. Also like to invite you to send your comments along to questionsfortaylor@gmail.com, questions, the number 4, taylor@gmail.com. Also, our sponsors, which have made this show now for more than 11 years possible. Our sponsors this week are RN Resources, Eli Gold Royalties, Great Bear Resources, Hannon Metals, Irving Resources, Novo Resources, and Sitka Gold Corp. I've titled today's show, What is the Future of the Dollar System and Gold? Ronald Peter Storfeli and Michael Oliver return. Ewan Downing, the president and CEO of Premier Gold Mines, visits for the first time. Alistair MacLeod has warned that the Fed, with its modern monetary theory, which isn't all that modern, actually, but reminiscent more of the South Sea bubble orchestrated by John Law 100 years ago, that system is in the process of hyperinflating the dollar out of existence. The obvious substitutes for a rapidly depreciating currency is, of course, gold. Few people are better able to give us a sense of what is transpiring in the gold markets during this still dollar-centric global monetary system than Ronald Storfeli. He'll be with me, as I mentioned, he'll be with me in the second half of today's show to talk about the impact of the most recent black swan to pay us a visit, pay actually all of humankind a visit, and I think you can't afford to miss what Ronnie has to say, his insights about this global economic shutdown, what that might mean for the markets, all of the markets that we are dependent on and that we invest in. Ronnie is definitely recognized internationally for his expertise in the world of gold, which in the midst of the COVID-19 havoc is aggressively on the rise. And for those of you who may not be familiar with my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, most of the stocks that I cover are those companies that are engaged in exploration and development of gold and silver deposits rather than gold producers. And since it is the producers that are the first to rise dramatically in a gold bull market, I have personally allocated a considerable portion of my portfolio in GDX while I wait for the juniors to start their move. And believe me, I expect all of the sponsors on this show, which are covered in my newsletter and which I own personally, to rise dramatically, even more so in percentage terms than the big boys. And this, I think, once this bull market really gets underway, that's usually what happens. The juniors, the little guys that are actually finding the new gold deposits, are the ones that make the biggest percentage moves. And I expect we're going to see some humdingers coming our way now with the sponsors of this show and others as well. But there is a company on my list that is a producer and also has some very exciting exploration projects that place it in the best of both worlds. And I'm speaking about Premier Gold Mines, headed by Ewan Downing, who, as I said, will be with me right after the first commercial break. It is a company that has, as I say, it is a producer, and it has some really great exploration plays and some advanced stage projects that are very near production in the feasibility stage. So a very interesting and I think very, very undervalued company, Premier Gold Mines. And we'll be speaking to Ewan Downing right after the first commercial break. But right now I'm really pleased to tell you that Michael Oliver is back with me again. It's olivermsa.com, olivermsa.com. Go there to learn more about Michael Oliver's letter. Thanks for joining me, Michael.
Hi, Jay. Good to be back. Fun times.
Yeah, it's really good to have you. I really miss not having you every week, but at least we get you every other week, and that's good. Well, we have to start out with the obvious question, gold. It's for the longest time you've been talking about $1,700 gold as being a likely resting point or a resistance area. Now that we're in the 1700s, what are your thoughts?
Well, we actually go back a month or so. You can see the spot futures high was 1698, I believe. We had a sell-off. Then the last high in March was above 1700, had another sell-off, sharp one then. It was 3 days of hell on the downside. Spooked most people out of their positions probably, cleaned the market up, certainly cleaned up the gold mining sector, and then we rocketed to the highs. And in fact, the most important technical thing is not the fact that gold's well over 1700 now. It's got the 1775 today. Active, the front month future, the April contract, is what GDX did today. GDX has been capped off price-wise. Remember, this is an ETF that was trading in the mid-60s back in 2011 at the bull market peak. It dropped to a low of $12.40 in the bear market that ended in 2015-16. Okay. But in the process of coming down, there were some rallies in 2013. If you recall, it was in the spring of 2013, gold really crashed, and it crashed the GDX as well. There was a rally high in mid-2013 from in the teens up to 31, and it failed there. Okay, then you went back down, major low, your actual bear low, to late 2015, early 16 at $12.40. Rallied again in mid-2016 back up to 31. Then sold off again hard, and then drifted lower into 2018, never getting back to the low, again, the $12.40, but getting, down below 20, well below 20, down to about 18 or change. Then you came back up again last summer, and you went to 31. And for months, several months up there, about 4 or 5 months, you clustered in the 29, 30, 31 level. Unlike the two prior highs, in the 2013 rally and 2016 rally, when they kissed 31, they were whacked off the high, way off the high. They didn't cluster there. We clustered there. In other words, like a fist of action, pressing at the 30-31 level. But then came the March sell-off, and everybody thought, oh, well, it's all over. We failed again. Got down to $16.10, and then we exploded. We traded at 32 today. We took out 7 years to the week of price highs on GDX. So GDX is now done with this week's action in the cleansing that it had in mid-March, which no doubt stopped out any weak longs and spooked everybody. Then turned around and exploded through the highs. So I think the GDX is now echoing what gold said last summer when it went up through the mid-1300s, which was its comparable base. So the miners are now in sync with gold in terms of even the price charts. And I think that's good. Now, I agree with what you said about the juniors. We ran a report on them the other day. And yes, they are lagging the majors right now. But I fully agree that when the public interest and the larger fund interest gets into this miner sector, the gold mining sector, that end of the market is going to have the greater percent move.
Yeah, it sure seems like it. I'm looking at GDX right now. It's actually off a lot today, down 67 cents. After it had hit 32, it's really getting whacked again, it seems, to a great extent. But you think it's sort of an arm wrestling area here that we're going to see probably break through 32 sometime soon, do you think?
No, I think the 32 trade was important. I think it was a sign that, that ceiling's gone. And, there's doubters. There have been doubters since that secondary low in gold. It was down around 1140 in summer of 2018. We've gone from there to 1775, and there have been so many points along the way that the doubters have said, see, it's no good, and it sold off. And then it came back and made a new high. It sold off again. Our suspicion is, what you should be looking at now is not the day-to-day of gold or the gold miners, the banks.
Okay.
The one sector,
with just about 3 minutes, Mike. Let us know what are your thoughts about banks, and then if you can squeeze in a quick comment, perhaps on the soft commodities.
Sure. The bank sector is the weakest sector out there. It's like today even, it's down a couple percent. S&P's up a couple. I mean, it's like it's in a different world. And yet we're reassured by every analyst on the TV, financial channels, that, no, there's no problem this time around. The banks are in great shape coming into this decline, et cetera, et cetera. We'd watch the banks. Okay, now on the other commodity end of the spectrum is the food commodities, particularly the grains. They've ceased to go down. They ceased to go down years ago. They've been going sideways for about 5 years. So they're really not in a bear market. They're in a sideways market. We're particularly keen about beans and corn probably making a low real soon, like within a week or so, and an upturn that could be quite powerful. We're into the planting season, by the way, starting now in April for corn and beans. So some of the fundamentals could start to come into play here. We have some suspicions about the planting intentions numbers that were stated a few weeks ago, that they won't actually bear fruit. But as far as the technicals go, we're watching corn and soybeans for an upturn because we think it could be quite powerful. The base is very, very wide on the grains. So when you come up out of here, it should be something that lasts for a couple years and is quite strong.
Mm-hmm. All right, so and I think have another minute yet, Michael. What about the equity markets in general? I mean, a lot of people are feeling pretty good today. The Dow is up 500 points.
Oh, sure, everything's going to be good when we've overcome the virus thing and so forth, and that's topped out and so forth, and I'm sure they'll tout that. I have a bet here. There's certain concepts that are going to occur, terms that are going to be used in the next year or so that we're not thinking of right now. Secession's one of them. I think there's some counties in certain states that are interested in separating from the states. And these are political and economic reasons. In other words, things we haven't thought about. Another one I'm thinking about is this. First, why are the banks under such pressure?
Why?
I strongly suspect that the people we only had 60-some-odd% of renters pay their rent this month.
Uh-huh.
Okay? Now, and car loans are going delinquent like crazy. These banks got problems there, but that's also reflective of people who made decent money in 2019 in their jobs and now suddenly are going to have to pay taxes on it. The fact that they were delayed 3 months till July is not going to better their situation. I'm going to make a bet that there's a stat, and I'm trying to look for the source of it, on failures to file. And I'm going to bet in July that the number of failures to file goes through the roof. Mm-hmm. And at that point, then they have a major problem with the tax system. Are you going to go after these people who, probably only marginally could have paid their taxes had they paid in April, if then? But out to July, they're going to be worse off than they are now.
Yeah,
so my bet is you're going to have a failure to file, and you're going to have a tax situation where it wouldn't surprise me in a year you don't have income tax anymore, that the government simply prints the money.
Oh, my goodness.
For reasons of massive political pressure, they can't go after these people. There's too many of them. It's going to be an interesting number in July.
It is an interesting world. It is a very interesting environment that we're in. And I think the only question you can ask if your scenario comes true is, have you got gold?
Yes.
I can't think of anything. I can't imagine of any earthly thing that's going to be more important. Well, I can. Food.
Yes.
And that's why your comments on commodities, I think, are very important. We'll probably want to ask you more about that when we have you on again. Thanks so much for being with us again, Michael, and it's always good. Always good to have you.